This is our Forex blog for January 27th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. Underneath the real-time strength or weakness of each currency, we have the daily, weekly, monthly. And in a quick look at this, you can see that the Australian is one of the strongest, the New Zealand is one of the strongest. I primarily look for the daily and weekly trend to be in a particular direction. The weekly trend of the Euro's just barely up, so when it starts to have some strength here at 5, it's possible it's going to continue, and it does, as you can see. Same thing with the Swiss. The dollar is extremely weak across the board, and especially compared to the yen, which had a lot of strength last night, the dollar's the most consistently weak main currency. So basically you want to look for buying the Australian dollar, the New Zealand dollar, selling the dollar Swiss are all good ones to be focusing on. Here's the Australian dollar. Let me scroll forward to today. You can see this currency started underneath the hourly moving average because it had a pullback yesterday. And any time a currency runs into the hourly moving average and breaks above it, especially when the daily, weekly, monthly trend's up, it's a pretty good high probability trade. And most of the time it's going to work its way to the upper containment band here, or at the minimum the first or second fib target. So this is one of those trades where you could buy the breakout here at 29, maybe put your stop underneath the previous bars low here. You're risking about 6 to 10 pips. Your profit target is about 12 to 22 pips away. And you can see if you got out with a trailing stop, you got out here at 48 and you're in at 29. It's about 18, 19 pip profit while risking less than 10. Here is the New Zealand dollar. Let's scroll forward to today. And this one actually was above the hourly moving average. It kind of chopped around and went sideways. Anytime you see a very low volatility, 10, 15, 20 pip range, rectangle pattern, it tends to be a very high probability trade. So when it breaks out of this area, if you wanted to buy this little pullback right here, you can see it went up. You got stopped out with a small break even or loss. You buy the next breakout here. Previous day's high is a pretty good place to get out of the trade. You can see it kind of lost a little bit of momentum here. The upper containment band also is a pretty high probability place. Not the biggest trade in the world, but a winner nonetheless. Later today, when the euro resumed its slightly weekly time frame uptrend at 5, after a little bit of a pullback right here, coming up to 7, not a bad place to look to buy the euro dollar. Here's 7. Now this one's already near the upper containment band, and you can see this had the same pattern earlier today. If you see a currency where the weekly trend's up, but it's underneath the hourly and it's kind of just chopping around and it finds support at the lows twice, when it breaks out over the hourly right here, again, good place to get long even before the 7 o'clock period, and it went all the way up to 60. So it broke out and went up 40 pips. You bought this little pullback right here, you might have made 15 pips. And then when it came back down and found support at the same area again, broke out of this area right here, it didn't go up that much, 18 to 49. It went up about actually 30 pips. You got another pullback and made a higher high. This breakout here went up about 30 pips. You can see later in the day the euro became extremely strong, and so did the Swiss. The dollar Swiss was also an excellent one to be selling later in today. When currencies are underneath the hourly, you want to focus on selling. When they're above the hourly, you want to focus on buying, and primarily focus on the daily and weekly trend. This one is extremely weak. This one had, actually this is a perfect example of our Elliott two-wave pullback right here. When the market pulls back, and usually it's near the lower containment bands, it makes one wave up. Usually you can look to get short at the first or second fib target. So in other words, as soon as it stops going up and goes below the previous bar's low, which would be right about here, you go short and you put your stop right above the high by a few pips. And you can see this one pulled back from 07 all the way down to 76. So it's about a 30 pip pullback. Then when it went back up to the hourly and it failed to go above it and the statistical strength was very little, you go short again, and you can see this one fell about 50 pips. If you focus on trading in the direction of the weekly trend and the daily trend, And if you are shorting currencies underneath the hourly when they're in the direction of the daily and weekly trend, you're going to find some trades like this. Some of them are only going to go 5 to 15 pips, but you're also going to catch some 30 to 50 pip wins, as you see in this one here. And I think it was the euro dollar or pound dollar.